Good afternoon. Welcome to the City of Opa-locka Special Commission meeting. This is a virtual meeting in regards to our audit. This is to finalize our discussion for our 17-18 audit. With that, Madam Attorney, could you state the virtual protocols that governs this meeting?
Yes, Mr. Mayor, if you can please call the roll first, and then I will have that up and I will be able to state that on the record.
All right. Madam Clerk, roll call.
Commissioner Bass.
Here.
Commissioner Burke. Vice Mayor Davis.
Here.
Commissioner Kelly. Mayor Pygott.
I am here. Commissioner Bass, could you lead us in invocation?
Father, we thank you again for waking us up this morning. We thank you for our city. We thank you, Lord God, for every co-worker. We thank you for our mayor and commission. Father God, bless us this day. Help us, Lord God, to govern accordingly. Lord God, may you give us revelation, oh God, of truth in Jesus' name. Amen.
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 Mr. Chief of Police, could you lead us in Pledge of Allegiance?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right, thank you very much. Madam Attorney, could you lay out the protocols that govern this meeting? You have to unmute your mic, Madam Attorney. Madam Attorney, we can't hear you.
Yes, I thought I did. Okay. Pursuant to, yes, Mr. Mayor, pursuant to Executive Order 20-69 issued by the Office of Governor Ron DeSantis on March 20th, 2020, municipalities may conduct meetings of their governing boards without having a quorum of its members present physically or at any specific location and utilizing communications media technology such as telephonic or video conferencing as provided by Section 120.545B2 Florida statutes. The members of this workshop meeting appearing remotely are Vice Mayor Davis, Commissioner Bass, Commissioner Burke, and Commissioner Kelly, and of course, Mayor Pygott. An opportunity it was not given for a workshop meeting unless the clerk has noticed otherwise. And Madam Clerk, would you please state your protocols for the notice at this time?
Mr. Mayor, may I?
Madam Clerk.
So yes, an opportunity was given to the public to provide public comments. It went out along with the notice that was sent out a couple of days ago, I believe on Monday. But the public may comment by submitting their comment ahead of the meeting via email to publiccomments@opalockafl.gov. Comments submitted by members of the public by email will be read into the record during the meeting as long as they provide the comments by the deadline, which is 2 hours prior to the scheduled meeting time. Comments received after the deadline will be kept for the record, but will not be read during the meeting. And at this time, Mr. Mayor, no comments have been received for this workshop.
And Mr. Mayor, if I may just say that the city has gone beyond the call of what's required by statute in affording the opportunity for this workshop for public comment. Thank you, Mr. Mayor.
Thank you very much. With that, we have public comment on our public input on our agenda items. As the clerk noted, we do not have any public comments. So for those that are watching, please make sure you utilize the public comments at opalockafl.gov so you can stay engaged with the city and be a part of this conversation. So with that said, Mr. Manager, would you introduce our presentation and why we're here today?
Thank you, Mr. Mayor. We're here today. This workshop is to go over the financial audit findings for fiscal year 2018. I introduced you today a presentation by Anthony Brunson, PA, to go over the audit findings and to address any questions and concerns that the commission may have, as well as any dialogue that may take place during the presentation. Mr. Brunson, you may begin.
Thank you, Mr. Manager, Mayor, Vice Mayor, Commissioners, and staff, thanks for the opportunity to work with you at the city. What I'd like to do, I'm going to pull up some documents. If I can have the screen, I'm not
Mr.
sure.
Mayor, if you go remove
The agenda.
your item from the screen to allow the screen to be shared.
Okay, we've provided a series of documents as that occurs. Those documents are a report on governance, which is where we would like to begin. And it basically are the requirements that we must, disclose to you in connection with the audit. Initially is the cover page, and it summarizes the audit. The actual draft of the audit report has been remitted to the city and its staff. That actual audit report is right about 100 pages. So in connection with that, our responsibilities are to report these matters in connection with our standards. So we could start with our responsibility, and in essence, it's, we conducted the audit pursuant to generally accepted auditing experience and government auditing experience that's promulgated by our standards. And accordingly, the scope of our work wasn't any fraud or special type studies. The scope is just to be sure that the financial statements are fairly stated and free from any material error or fraud as a result of our work. The accounting practices are those that are customary in the industry. Traditionally, each year, they're GASBs, the Government Accounting Standards Board, which govern governments, issues new GASBs. This year, we implemented 75, or for fiscal year 2018, GASB 75 was issued, which talks about some financial reporting for state and local governments, the post-employment benefits, et cetera. Audrey, help me out. I believe there was another statute. Was that effective in 18 for debt, or is that next year? Debt disclosures.
That's effective for fiscal year 2019, so it's not effective this year.
Okay, so it's not this year. We talk about the authoritative literature. There are no unusual transactions in connection with our work. There are no alternative treatments. In connection with, there's a great deal of judgment and estimates done when working with governments generally, and specifically with the city. Those judgments, address like your fixed asset lives, the fair value of accounts receivables and other receivables that you may carry on the book. There's a great deal of cost allocation among programs or among funds, general fund versus your water and sewer fund or other funds within the city, and really a lot of adjustments and estimates done in connection with pension and retirement plans of employees of the city. Okay, all of our financial statement disclosures are consistent with what's required in the industry. We want to give special attention. We did issue a qualified opinion which addressed capital assets of the city. It's pretty consistent with last year in that, we've talked about the city conducting an inventory of the physical assets to ensure that assets that are carried on the books are consistent with what's actually, in and around the city in a variety of ways. I mean, it's tough to remove sewer lines or little bridges, or certainly some of the roads, but obviously there is a number of items that are transferable whether it's, cars or furniture and fixtures among offices, things of that nature that are in the city. So as we get closer to getting things, the city gets closer to seeing that everything is caught up with these, with the audits. We're only one away right now. We strongly suggest that, the physical inventory be conducted of all the city's assets to remove that qualification. There is an attachment with the audit adjustments. That attachment is here. And I mean, collectively, if we were to scroll through it, it's somewhere about 150 audit adjustments that were, made throughout the course of the audit. Many are actually most made by your staff, kind of getting through the original document to the ending numbers. But it is surely, as you can see, a really significant volume of adjustments, which we'll talk a little bit about later when we get to management letter comments. But it's our requirement that we provide these to you and that your staff, acknowledge them and agree with them, because they lead to the final numbers in your audit report. Okay. No disagreements with management. Although there weren't any disagreements, we obviously had some challenges given the nature of what we just passed, a pretty large volume of adjustments. There was, turnover of staff, timing of the engagement always impacts it. We're in 2020, and keep in mind, we're actually opining on the fiscal year that ended September 30th, 2018. So just, trying to reach out and gather records and things for that timeline, combined with the turnover of people and, with the city, makes that always a little more challenging in conducting the audit process. We had no consultations with any third parties, so we're pretty good in that respect on any significant accounting, audit matters, or other matters. There was no need to kind of reach to any outside expert in conducting this audit. And the next areas are just some of the significant items that we discussed with management during the audit. From a planning point and going forward, we briefly talked about the audit opinion being qualified in the current year, consistent with the past year, and we talked about the reason why being your assets. There were a series of prior period adjustments that flow through your report this year. Those prior period adjustments, and maybe we'll talk a little bit about that later, I'll kind of give that to Jerry. They were minimal on the governmental fund side, but they had about a $2 million impact on the enterprise funds as a result of the audits. We briefly talked about the adoption of the new GASBs, the significant audit journal entries, and we'll get to the recommendations that talk about the internal control environment as we go forward. So with that, we're independent. There are no issues about going concern, but what I'd like to do, if deemed appropriate, is go to the internal control comments. Mr. Mayor, Mr. Manager, if that's appropriate.
That's appropriate.
Yeah.
That's
Yes,
Walk
appropriate.
through them.
Yes, sir.
Okay, as you can see here, the current year findings are just really more follow-up in those findings from the prior year. So typically, if you look at this reference, 2017 means these findings were presented in the year 2017, which would have been last year or other years. So we don't have any 2018 references. We're just kind of following up on the prior year references and the status at that point, which are, were carried over in 2018, but they're all would have been said before. So we didn't need to repeat them. We just kind of updated them. The first being the Auditor General findings. As everyone I'm sure is aware, there were 99 findings originally. According to the manager, or you guys' response, the team, like the management team or senior management, it says that 30 of those findings have been completed, with the work underway on the other findings. So I'm going to keep going, guys, unless someone wants to kind of jump in. Okay, the next finding had to do with strengthening staff resources in finance and accounting department. I guess the best example of that, or that the volume of audit adjustments that are made since the point we receive a initial working trial balance, and the changes that do occur. Most of those changes occurred all the way through the end. It says, through February, but that really went through mid-April or April in connection with getting adjustments for the work. And as said there, it was around 150 adjustments, which had over 3,000 data entries. And the real key there is the city really needs to, I know they're outsourcing a good deal of the work to consultants, but I believe it's challenging for consultants to, come in around year end and try to, in essence, catch up a year's worth of accounting activity. So that comment came back. It's still very much a matter that the city needs to address. Okay. The next comment, physical inventory of the infrastructure and fixed assets. Well, we've talked about that, and that's what has resulted in the qualified opinion. I don't know, I forget what year, I think it was 2014 or 15. There was a mandate that went out that all cities had to do physical inventories in connection with their infrastructure and reconcile those inventories to items on the books. It has always been a general rule, but I guess from a standpoint of the Auditor General or statutes, addressed it more formally beyond some of the federal requirements. The federal requirements on your fixed assets, any monies that are received by federal funds should be inventoried, I believe it's biannually. Audrey, I turn to you again. Is that correct? Is it biannual?
Yeah, they should. It's mandated that they should at least do an annual inventory every 2 years.
Well, biannually, every 2 years.
Yes, correct. Yeah.
So one has not been done, or we haven't evidence of one being done, quite frankly, in at least 5 years and probably longer.
Mr. Brunson, I'm looking at the screen and I'm not following your statements with the recommendations. I know there's a document that you're going from. Can that be pulled up so that the public can see? Okay, great. There we go.
It's here.
All right.
I'm kind of paraphrasing. I'm not actually reading the document, but here it is.
Oh, okay. Yeah, I went through the document earlier and I said anything happening. So, okay.
All right. So this is the one on the physical inventory of the assets. Each of these comments will talk about the criteria, the condition and recommendations. Like I said, many come from prior years. So we'll give a current year status. In this case, we're saying it remains relevant, and the response from your management team comes here. The next item was the reconciliation of the cash accounts, 2017-04. And obviously, one of the key control items, I just say obviously, but one of the key control items in any environment is to do timely bank reconciliations. You know, during our audit, again, we noticed really large differences in the amount of recorded on the books versus amounts in banks. There was reconciliations did not get done until well into 2020. So that's one of the major internal control issues with the city. In the completion of the work, there was nothing that stood out in terms of any, you know, fraud. We looked at the cash activity, although not performing a fraud audit. We did spend a great deal of time looking at all of the significant checks that went through the city and accounted for all of the checks that went through the city. So obviously the reconciliation or the recommendation is that reconciliation should be done on a timely basis. And in the case of September 30th, 2018, those reconciliations weren't fully completed until April of this year, 2020. And this goes on, this gives the city's response to the suggested recommendations. Give you a moment to take a look at that. Okay, the next item is 2705. We talked about the internal control over some of the payroll processing and personnel files. Again, you know, the criteria, some of the conditions that we see in terms of timesheets and personnel files. We did see some improvement in 2018, but you know, there's still quite a bit of improvement that could be done. So that in that respect, we said it's still relevant in 2018, and it's principally with personnel files, just the documents, the type of documents that should be there, you know, W-4s or changes in pay rates and approvals and pay rates agreeing to things in files, you know, timesheets being signed off. It got better, but it's still, you know, an issue in our opinion in connection with the audit. And again, here are the responses from your team members. For those that want to take a moment or two and look at it. Okay, those items would be considered material weaknesses. Material weakness is kind of the control environment doesn't capture procedures to kind of catch errors or fraud in a timely basis. And I guess the best example, by not doing bank reconciliations timely, if there are errors in the system, if you're not conducting those monthly, you don't catch it until you actually get the recommendations completed. The next grouping we call significant deficiencies. And again, what we would consider pretty significant control deficiencies, but just not to the degree of a material weakness. These are items that need to be done timely, but again, not as, I guess, just not to the degree of material weakness. Here we talk about the pension plan remittances, and I want to keep everyone to keep the perspective that these recommendations go back to the year 2018. We identified them in 2017, but the audits for 2017 wasn't done until 2018. So there's a time lag in trying to get these recommendations implemented. But in the case of the pension plan remittances, we were still seeing where deductions from employees, they just weren't remitted to the Department of Labor on a timely basis for the year 2018, fiscal year ending September 2018. So it remains a recommendation for that timeline. Okay, this recommendation 0215 goes back to 2015, and it's considered material, as you can see there, for prior year recommendations, and it just addresses the timeliness of recording individual transactions. So we've, since 2015 through these audit cycles of 16, 17, and 18, obviously it's still, the condition exists. And hopefully, as we look upon this fiscal year, there is significant change or improvement in the timeliness of recording the transactions. Significant deficiency, this goes back to 2015, and this is fiscal year 2015 as well, where we talked about upgrading the accounting system. It hasn't gone away. I'm sure it potentially is a resource issue, but the accounting systems that are in use are, can clearly be better to assist with some of the efficiencies in connection with the reporting, the financial accounting reporting to the city. Here's an 2015-03 as well. I mean, we talked a good deal about updating the policies and procedure manual and reconciling accounts to general ledgers, subsidiary accounts to general ledgers, and related supporting documents. Again, it's improved, but the condition still exists in terms of getting the proper updated manuals and some of the general ledger reconciliations to subsidiary records and transactions and supporting documents and all that sort of thing. In 2015, we saw where journal entries were being made without any approval. I think as we came through 2018, it's been implemented. So now all the journal entries that we saw have been approved prior to, a member of the accounting staff, from accounting clerk, whomever may be responsible, just entering them into your books and records. That would be one of the best ways to commit fraud. If someone that's doing certain bookkeeping or records, they would fix things just by entering journal entries to get things to balance. So that's why it's important to get a third-party approval of any journal entry prior to it being entered in your books and records. So in 2018, that item seems to have been implemented. Deficit cash balances were an issue in the past. I don't think that item is a concern in 2018 as well. So we considered it fully implemented. There were checks outstanding, and this was back in 2014, as you can see. In the bank recs that were over a year old, if you recall, there were checks in there that may have been 2 or 3 years old remaining in the bank reconciliation. So that item had been fully implemented as well for fiscal year 2018. All those old checks have been eliminated and taken out. Budgets. Right now, you guys are doing the budgets, and so this is no longer an active comment for 2018. It talked about deteriorating financial condition. We say significant progress has been made, although not fully resolved. We think the city's in a much better state versus where it may have been in 2014. The last comment, I believe this is the last comment, talked about federal awards and state projects. So it's no longer applicable. It got resolved. This was some of your capital grants in connection with water and sewer. So it got resolved during the year, and it's not applicable in 2018 because we didn't have similar type grants. Well, we may have, but we didn't test them this year because we test them in a single audit process when you get more than $750,000 in grant awards, which did not occur in 2018. So that would have been no longer applicable. As you can see, this is near the end of an audit report generally, so would be at page 96 there. So that highlights the control environment, and you know, those items we needed to address and are required to address. I didn't know if there are any questions at this time. What concludes our presentation would be this PowerPoint item.
Okay.
Not hearing from anyone. So.
Yes, if you can continue the presentation. I know we have a 4 o'clock special commission meeting to address this. So if everyone can write down their comments and questions, and at the conclusion of the report from the auditor, we will and entertain any questions and comments, but we want to make sure you're able to get through your information and your report before we start getting into our questions and comments.
Okay, and I get the full screen here. I'm seeing something, but this is the financial overview. As you've been mentioned, the financial statements are, you know, nearly 100 pages, so we find it easier to summarize it with these PowerPoint presentations. And you can see the change in your assets. What am I doing here? Not right. It's 35.25 million there compared to 34 million last year. You know, the asset balance is basically the same. It's about $500,000 more in 2018 compared to 2017. And if we were to look at the details, you know, you'd see that your physical assets went down some, and your current assets, things like cash and receivables, went up about $500,000, a little more than $500,000. So that's a good thing, and that the asset growth is in liquidity, and you know, which makes all the better to have liquid asset grow than physical assets, so to speak. Your liabilities went up about 1.2 million compared to the past year. I believe those liabilities on an aggregate basis, and this is entity-wide governmental, were pretty much the pension activities. They're related to pension and compensated absences with employees, that sort of thing, which, you know, the combination of those, the inflows and outflows are pretty much pension driven. So I'm not kind of overlooking that, but your net position, it did go down a little, about 566,000. You see, you went from 6,000,009 to 6,358,000. So that's a reduction of a little more than $500,000, which kind of really is driven by the increase in your liabilities. Those were the general funds. These are your proprietary funds, which are your water and sewer funds. What are the other proprietary funds at the city? Audrey, help me out a little bit here.
The solid waste, it's the water.
Solid waste.
And stormwater.
And the stormwater, okay. Again, you can see the asset base was pretty much the same. Last year it was 17.924 mil. This year 17.8 mil, so it's a slight decrease. Liabilities 16.9. Your liabilities actually went down to 16.237, so that's $686,000 decrease. And your net position actually grew, so it came from 1.2 million up to grew a little over $500,000 here to 1.786 on your enterprise funds or proprietary funds. We do an overview of the revenues with this schedule, and it compares current year's activities to last year's activities. You see your charges for services, grants are broken out into major asset categories. And Jerry, could you kind of chime in on this one and talk about the changes in revenues and some of the reasons for the changes?
Sure. So good afternoon, everyone. I think the major reason for the change, and can you hear me?
Yes.
Can't hear me. The major reason for the change between 2017 and 2018 had a lot to do with the fact that the city funds were withheld from the state, the audits on time. So there was a freeze of some of the intergovernmental revenues that come into the city that were held. And that's what caused the revenues to go down. But there was a slight increase in certain other areas as well, in terms of surtax funds that we received, the timing of reimbursements. So I think it would have definitely been much higher if we had not had the help from the state. However, there were some decreases in other areas as well.
Okay, is that it? Ooh. Sorry about that. Okay, so those are the revenues on the governmental activities. Here are the expenditures. Similarly, you can see where we're at 15,071,071, and this is the governmental fund. And we're up 15,694,000. That's about a $500,000 increase. And I can turn back to Ms. Lazar again.
Enter your meeting ID followed by pound.
Ms. Lazar?
Enter your participant ID followed by pound. Otherwise, check pound.
Did I lose everyone?
I think we lost Ms. Lazier. Looking
Okay,
at,
well,
I had my volume down, so I apologize. I think I'm back now. Can you guys hear me now?
yeah, you're very muffled at the moment. Go ahead and speak again.
well, we're talking about the governmental activities, and you can see general government costs went down from 6,000,007 to 5,000,009, and you increased it, your expenditures in your public safety and the transportation areas compared to last year. So I don't, Jerry, if there's some specific events that you can share, I think.
Yeah, sure. I'm sorry. It looks like can you guys hear me now?
We can hear you, Jerry.
Okay, awesome. So let's talk a little about the governmental funds. So governmental funds went down just a little bit because of the fact that the city had a hold on their funds from the state. That had a lot to do with the intergovernmental revenues. That's why there was a substantial decrease between 17 and 18. That had a lot to do with our half-cent revenue sharing type of revenues that most our people are aware of. The expenditures on the governmental side actually went up a little bit, and that had a lot to do with the fact that at the end of 17, they went through Hurricane Irma, and a lot of the expenses fell into fiscal year 18. There are also some increases in public works and some increases in code enforcement during the 2018 cycle versus 2017. But there were a lot of Hurricane Irma expenses from 17 that kind of happened around September 2017 that kind of filtered over into 2018 fiscal year. With respect to the proprietary expenditures or revenues, we noticed that, expenditures, my apologies.
You want to talk revenue or revenue first. It went down from 9,600,000 to 8,384,000.
It had a lot to do with the collection efforts with the utility operation for utility billing. So the city was behind in billing a lot of their customers. So as a result, although they were collecting revenues, as a result of them being behind in billings, the revenue suffered significantly because of that. So that's why you see a large decrease in the charge for services. Obviously, in the prior year was $9.3 million in charge for services versus the current year, which was $8.1 million in charge for services. So again, a lot of that had to do with the utility billing operation. And you'll even see a slight decrease even in fiscal year 19, because that's when a lot of the transition took place with Miami-Dade County. So we're going to continue to see a little bit of a dive in fiscal year 19.
And the expenditures would include the proposal or the presentation.
Right, so even in fiscal year 18, there was a sharp decrease also too, because in 18, they stopped managing their the sanitation division. It stopped, I think, around March or April. Is that correct? March or April of 2018, the sanitation division went down. So sewer disposal fees also went down. Our DERM fees went down, obviously, because DERM is a percentage of your utility billing revenue. So as a result of the revenues going down for utility billing charges, so did the DERM fee that's paid, which is about 6 or 8% around that time. And so those are some of the things. Another major thing that went down significantly in 2018 was contracted services.
Okay. So that would conclude our presentation in connection with the audit.
All right. Thank you very much, Mr. Brunson. Appreciate you, Ms. Lazier, for providing that information to us. Right now, I'll open up the floor to my colleagues for any comments or questions.
Mr. Mayor.
Vice Mayor Davis.
Thank you. Thank you again, Lazier and Mr. Bronson, for completing this most recent audit. I heard some good things. Ultimately, that we don't have to worry about the going concern, which means that we're financially solvable and we're going to be around for a while. I also heard some good things that about liquidity, and that we are pretty liquid and are continuing in an upward trend to ensure, that we have enough cash on hand to pay our bills. So, that's all good news. One thing I didn't hear was I guess, the results of what opinion was rendered this time around. Was it qualified, unqualified, modified? I know we've been kind of tracking that and just making sure that we're on the upward mobility as far as our opinions are concerned. So if you can kind of speak to that through the mayor, if I may. Thank you.
All right, Mr. Brunson, can you answer that?
Yes, the opinion, Mr. Davis, Vice Mayor Davis, was, again, it was qualified, but the reason for the qualified opinion has to do with your physical assets, your plant. There has not been a physical inventory of all your fixed assets, held by the city in a number of years. So to the extent that, we actually know that they exist or not exist, creates that qualification. I'm looking at a note or your report. I mean, your fixed assets represent over $25 million that's carried on the books. So, at some stage, you got to go to lift that qualification. You got to actually conduct a physical count of those assets to ensure that they should be continued carried on your books.
Thank you for that, Mr. Bronson. Through the mayor, I guess at some point we might want to reach out to the city manager's office and ensure that we are doing our due diligence as far as account for our assets, or we do have a process in place. So we're working on, getting that process outlined, because that's very important moving forward, and ensuring that we, have the right accounting practices in place.
All right. And thank you, Vice Mayor Davis. Any other comments, questions?
Mr. Mayor,
Commissioner Burke?
I've had that same problem for at least a couple of years. Not doing inventory on our assets, and because of that, a lot of our equipment has left with former workers. And I'm recommend once we get straight, that's something we do as soon as possible. Thank you.
All right. Thank you, Commissioner Burke. Commissioner Bass?
Yes, because of the restraint of time, I will not go into all my thoughts at this time, but I just want to tell the team, thank you so much for your hard work, and let's continue to move forward. Thank you.
Thank you very much, Commissioner Bass. I echo the concerns that was raised by Vice Mayor Davis and Commissioner Burke, and also the praises of Commissioner Bass to the team. We know that right now we are still within the financial crisis, and these audits are a few years behind. Well, actually, we'll be caught up with this past audit, and we have one more now for this past year. So it looks like the picture is getting brighter, but there's still a lot of work to do. So I echo the concerns raised up by our auditors and ensuring that we do have a fully functioning finance department that is keeping up to date with bank reconciliation, and that staff is doing the inventory. I remember specifically asking and being told that HR and Public Works were doing the inventory this year. So I look forward to seeing that and being completed and done pretty soon. So right now, due to the fact that we got to get this audit in because of the deadline that we have with JLAC and other deadlines we have with the state to complete our financial recovery plan, and also next year, this past year's audit. I understand how quickly this information had to be presented to us today, and also a vote today. So once we get through this financial crisis that we're in, I hope that moving forward in many years, we will have adequate time to be able to digest these audit reports, all those recommendations that have been consistently laid out by Mr. Brunson and his team, have specified plans and action steps to ensure that each and every one of those are addressed over the course of the next year or two, once these audits are caught up. So with that, that actually concludes my remarks on this. Mr. Manager, do you have any other final remarks?
Thank you, Mr. Mayor. First, I'd like to commend the finance staff and financial consultant in the countless hours they put in into ensuring that this audit was done in an efficient and effective manner. Long hours, and I know we're always behind the 8 ball in doing these things and trying to put the city in a position of recovery. So I would like to, provide my accolades to staff and everybody involved. I'd like to give great thanks to Mr. Brunson and his staff in dealing with the city during his audits, and I've been a party to very, very, very interesting discussions during the audit process. I see the recommendations that need to be implemented loud and clear. To answer a large question and not to be long-winded, as far as physical inventory is concerned, typically when the city loses control of their physical inventory, typically a RFP is done and an outside third party is typically brought in to do a physical inventory audit, impartial physical inventory audit, in order to get things back on track, along with proper tracking software and the proper training and process to maintain assets. So I will look at exercising that option in the near future to try to address our physical asset issues. That is not something that I would want to belabor our public works department, our HR department to do when they have other jobs they have to do and accomplish. And if that's the only thing that needs to get done to get us into a better level of opinion, why stop where we're at? Let's get it done. So those are all the comments I have. I know there's going to be other questions and comments when we go into the next segment of our special meeting. So I reserve the rest of my comments for then. Thank you, Mayor.
All right, thank you, everyone that's been engaged and involved in completing this audit. This is, I said, another huge accomplishment for this city to have so many audits done within this past year. So I really appreciate the time that everybody has put in, and we are going to address each and every one of those recommendations as the city manager stated, and also get in the proper third parties to address and make sure that we're on point as a city. So with that said, I would like to get a motion to adjourn this meeting so we can start up our special commission meeting. I have a motion to adjourn.
Motion to adjourn.
Moved by Vice Mayor Davis,
Second.
second by Commissioner Burke. This audit workshop is concluded. Thank you very much. Have a good day.